So you want to learn how to invest in cryptocurrencies, but there are too much information around. And building a crypto portfolio is easier said than done because there are so many different cryptocurrencies available and different type of tokens as well. The ideal goal is to build a portfolio that can withstand the test of time and earn you some passive income at the same time. After all, this channel was built to gain financial freedom. Hello beautiful people, hope you guys are all doing good and getting good gains in the market. So if you are new to the channel, subscribe for more content on crypto, stocks and all that good stuff. And while you're subscribing, do hit the like button as well, as it will help the channel quite a little bit. Most people are pretty curious about how does a crypto portfolio look like because there are many different types of tokens and so many cryptocurrencies out there. On top of that, the value of cryptocurrencies is affected by a lot of factors like influencers shilling tokens, new news of big institutions buying cryptocurrencies, coin listing on exchanges, etc. But in today's video, I want to talk about building yourself a portfolio, the different types of portfolio that you can start with, and I'll share some of my portfolio holdings as well. But before we move forward, I'm going to put it out there that this is not financial advice, and I'm not a financial advisor, just a random guy on the internet. So first and foremost, let's talk about why you want to build this portfolio. Is it mainly to supplement your current investments that you already have in stocks? Or is this just a fun thing for you to have so that you can catch some moonshots?
To the moon!
And by identifying these, it will be a lot easier to navigate and find out which portfolio works best for you. So when I first got to know about cryptocurrencies, it was the only form of investment that I had back in 2016-2017. But soon after traveling, that was when I really started getting involved in investing for long term and building a portfolio. So right now, my portfolio for crypto is mainly to beat inflation with the deflationary mechanism that some of crypto offers. Like Bitcoin for example, it goes through a halving every 210,000 blocks, which is roughly every 4 years. During this event, the amount of newly minted Bitcoins will be reduced by half, and the difficulty of mining Bitcoin increases as well. On top of that, there are only 21 million Bitcoins in the world, and nobody will be able to mint more Bitcoins, unlike fiat, which can be printed by the Feds or the central bank at any point of time.
Well, we're printing money.
So why is beating inflation important? The oversupply of currencies is one of the reasons for inflation. And when inflation happens, it reduces the value of currencies. This means that the same amount of money buys fewer products and services as compared to before. So back in the early 2000s, a McSpicy meal upsized with a medium green tea cost roughly $8.50. And I know this with a lot of detail because that's the only thing I eat at McDonald's. So fast forward today, that very same meal with a probably smaller patty costs of almost $10. This means that the $10 I had in the early 2000s is not able to buy the same meal today, and therefore our money has lost value just by holding it over time. So as mentioned before, money loses its value over time due to an increase in the printing of new money. And in 2020, more than 20% of the circulating US dollar was printed. But this is due to the pandemic and the US government creating new money and issuing them as handouts to the US citizens. So on the surface, this looks great because everyone gets money to tide over the pandemic and it's been a very tough time. But it has significantly increased the inflation rate. So in 2020, the inflation rate was 1.4%, and in 2021, that rate is 5.4% right now. And we have barely ended the year. And because the currency is controlled by central banks, they can decide when to print more money, and that can lead to even more inflation. So Bitcoin, for example, is kind of the reverse of this situation. Almost 20% of the current supply of Bitcoin is lost forever. So these coins are lost on hard disks, or people are locked out of their wallets, or people just forget that they had these coins to begin with. But don't forget that there will only be 21 million Bitcoins ever, and with about 2 to 3 million Bitcoins missing, this means that there is a scarcity of coins in the market, and thus this might increase the demand for it as well. And in recent times, many big businesses like Square, MicroStrategy and Tesla have bought into Bitcoins and a huge amount of them. and thus by holding them, it reduces the supply even more. So how should your first crypto portfolio look like? So here I have the makeup of my own portfolio, and I roughly have a few tokens here, and this is how I categorize them. First and foremost, there's Bitcoin, the big daddy of coins. This is my store value token, and basically what it does is, as a store value token, it's held mainly to store value. So it's pretty similar to holding gold in your traditional portfolio. Personally, I prefer holding Bitcoin, so that's why I'm holding it. Otherwise, you can look at other tokens like Bitcoin Cash, which is a fork of Bitcoin. Next, we have the growth tokens. These are the tokens that have potential to grow at a rapid pace, and some call these the moonshot token.
Now that's what I call a moonshot.
So my moonshot token of choice is VeChain and SLP. So these are two tokens in my portfolio that have more potential to increase at an exponential rate compared to the rest of the tokens that I'm holding. And at the same time, VeChain or VET has a dual function as it earns me VTOR, which I can use to buy back more VeChain, thus compounding my tokens. Next, we have staking tokens or utility tokens. These tokens have a function that you're able to use to earn some passive income similar to dividend stocks. So majority of my staking tokens are in huobi token and VeChain. I chose huobi token because it's the main currency that I use for events on the exchange like Huobi Prime and Huobi Pool. With these events, you're able to earn additional cryptocurrencies, sell them for huobi tokens, and increasing your stake in them. So with huobi token, this allows you to get more rewards, and also you can vote for election nodes, which is a delegated proof of stake system, allowing you to earn rewards in huobi tokens for voting into nodes and verifying transactions on the Hiko chain, which is the huobi ecosystem. So lastly, I have some stable coins, which every portfolio should have because it's like the cash portion of your portfolio. This portion of the portfolio is mainly for me to purchase dips, and when they are not in use, they are either in grid trading, earning me some profits, or sitting in my huobi earn account earning interest. And because we work so hard in our day jobs, our crypto should be working as hard as us, if not even harder.
I will work harder.
Like every other investment portfolio, this is what works for me, but might not work for you. Hence, always do your own research before putting any money into any investments. So it's very dependent on your character, your timeline, your investment objectives. Your portfolio will be very different from mine or from your friends. So here are some potential portfolio setups that you can consider. So for those looking for growth in their portfolio, might want to hold a larger majority of growth tokens in their portfolio. But the risk here is seeking out growth tokens, because these tokens are very dependent on news, and you might need to have close monitoring to ensure that things are going as your plan. And for those who like passive income like me, holding tokens that has a proof of stake or DPoS system will allow you to earn additional token over time, just like dividend stocks. And by doing so, your growth potential might be smaller, but you are consistently accumulating more tokens as time goes. But don't forget that even with those POS or DPoS tokens, when those prices increase as well, these might push your portfolio up too. So for investors who are more conservative, holding a higher amount of store value tokens might be something to look at. This will give you exposure to the crypto market, and knowing that you are holding a store value token will give you a better peace of mind. So the last important thing to do, other than hitting the like button and subscribing, is to rebalance your portfolio from time to time. Because the crypto market moves very quickly and prices might increase and drop at any time, it's always worthwhile to rebalance your portfolio to match your investment goals. Even if you are in for the long term, rebalancing your portfolio can help you adjust the non-performing cryptocurrencies and moving that money into cryptocurrencies that are performing better. Like your own personal stock portfolio, everyone does some rebalancing once in a while to ensure that they get the most potential growth, or even increasing positions in dividend stocks to get higher yields. And that is why you should do it too for your crypto portfolio. So that's the end of today's video. Thank you guys for watching till the end. Drop a like if you enjoy such content, subscribe if you haven't, and I'll see you in the next video.